This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. You're listening to episode 181. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rkraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the MicroCap message. Save the date. We have announced our next virtual conference, the SNN Network virtual event, which will be held on August 17 through 19, 2021. The website is live, so you can find the full details on the event at conference.snn.network. Registration is open, so click the register button once you are there. We're actually announcing our initial speakers and sponsors next week, so register now to be the first to know. Again, that's the SNN Network Summer Virtual Event happening August 17 through 19, 2021. The website to register is conference.snn.network. Look forward to seeing you all there. Now, for this episode of the Planet MicroCap Podcast, I spoke with Brandon Beylo. He is the host of the Hive podcast and research analyst at MicroCap. I've known Brandon for a while now, and this was way long overdue to have him on the show. He's incredibly passionate about investing, and that comes through in all of his endeavors via the podcast as well as his work at MicroCap. As a guest on his show, I saw that firsthand in the prep Brandon does, even for me. And I think he's just such a true asset to the space. We had a fun chat where we jam on his background, investing strategy, and specifically on cult companies and whether they make good cult stocks. Thank you again for tuning into episode 181 of the Planet MicroCap Podcast, and please enjoy my conversation with Brandon Beylo. Welcome, everybody, to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and joining me right now is a fellow soldier in the podcast minefield, in the field of battle, investing podcast. He's since starting it, it's really blown up, and I'm really excited to have him on here. Consider him a colleague and a friend now. So with that, I'd like to introduce Brandon Beylo, the host of the Hive podcast, as well as a research analyst at MicroCap.
Yep.
I know you're a host.
Research analyst. Yeah.
Okay. All right. The research analyst writer at MicroCap. And with that, Brandon, this is a long time coming, man. It's good to have you on.
It's good. Yeah, it's good to be back on. I'm trying to think of the last time we were on. It was, I feel like it was warm weather last year. It was almost like a full year ago, was it? Or was it in October?
I think it might have been in October, actually, or maybe not. Actually, it might have been a little later. Now that I think about it, I don't remember, man. You know what? But hey, I want to just say thank you for having me on. That was I got a lot of really great feedback from that, and I appreciate you, having me on the show. That was a lot of fun.
I mean, I'm trying to find everybody. Like one of the things that I think is funny is I'll direct message some of these people with 200, 300 followers or whatever. And I'll be like, hey, I just want to pick your brain, come on the podcast. And they're like, no, there's no way I'm qualified. And I just tell them, I'm like, dude, look at me. I'm going to look like the stupid one asking the questions. I'm asking you to come on because I think you're really smart. And I think other people would really enjoy hearing what you have to say. So, for me, it's just about finding these people that wouldn't traditionally come on podcasts and try to bring them on and create something fun.
I couldn't agree more. I mean, it's funny. I had those same conversations. I just had that conversation with somebody that I'm really stoked that's coming on the pod very shortly.
Is it Tiny Stock Ninja?
No, that one, I'm trying.
Because I just DM'd him.
Oh, that's so funny. I figured he could come on Maj's pod, which you were a guest on. on avoiding the crowd. Because I mean, he's now, I guess, a contributor to the geo investing premium option.
Yeah.
Look, I know people can go and follow you on the podcast, and you've done a few interviews before as well. But for our audience here at Planet MicroCap, let's start from the beginning. Where did your passion for investing begin?
Yeah, so I've been obsessed with stocks ever since I was in 5th grade. I had a professor or teacher, Miss Wheeler. We had a stock picking class, and it was just, you get paper money and you would just use Excel as your portfolio. And she was very Peter Lynch style, where she would say, hey, and invest in what let's pick a company, see which one and being the fat kid that I would say, oh, Krispy Kreme. Like, I love Krispy Kreme. And it's funny how they're actually IPOing again. So it's like, worlds collide. But I was like, oh, Krispy Kreme. And so, she typed in the ticker, and I was like, wow, like I could be a part owner of this donut manufacturer that I love eating. And from there, it honestly always stayed with me. Like, I had other interests and things like that as I grew older, but the idea of owning shares in businesses and being a part owner and actually benefiting from the business's success, is something that never left. And it was kind of like the inoculation phase where, kind of, if and so, it hit me in 5th grade. And by the time I was in high school, I guess I was printing off 10Ks, reading them in class. I hated school. So what I would do is I would just, during class, I would read 10Ks, read investor presentations, read Warren Buffett interviews. I would print them out. I can't imagine how many pieces or reams of paper I used from the school that I went to. It was actually funny. Like, the first, I forget whose podcast it was. It might've been yours, but I told the story of, I was printing off Coca-Cola's 10K, and at the time, I had no idea how large 10Ks could be, right? Because I'm in high school, I've got no idea, like what's a 10K, and so I was like, all right, I'll print it off, and started printing it off, and it was page 1 of 496, and I was like, oh my gosh, I got to stop this at some point. So I think I stopped it at like page 157.
Who told you had to read 10Ks? By the way, I mean, 5th grade, you're probably just like, all right, let's see, I like.
Well,
Krispy
it's actually
Kreme.
funny you mentioned that. So it was just kind of, I found out like, okay, this is, I can invest in companies that I know and understand. And then the teacher said, okay, a way to figure out, if you want to buy the company is you read their reports. And so she said, you go to Yahoo Finance and you can find the reports, and then you can go to the company's website and find the reports too. And so it wasn't a time where I was like, oh, I need to, read the 10K, because who reads 10Ks anymore? But it was just something that I started doing. And I don't know if it was just boredom from like my stats class in high school or something like that, but I'm just like, you know what, if Buffett started with the 10Ks and started reading the financial statements, like, let me start doing that. And I did. And from there, it's been, nothing but just trying to obsessively learn and nonstop journey in just trying to learn and understand as much as I can.
I mean, even then, were you starting to build up the patterns in your mind? Like, okay, well, I have a competitive advantage. I started reading these reports younger than most, so did you start coming up with patterns in your mind? Because look, most people that read, you got Paul Andreola who reads every CDR filing. You got Mosh who reads every Q and K. I mean, there's a ton of examples of people that do that, but I think the reason they do that now and they still do that is because they develop that pattern of like, all right, I know what I'm looking for. Okay, good. Next, were you starting to do that? Were you starting to develop those patterns in your mind? What were they?
I don't think on purpose I was, but
sure, of course,
looking back, it was one of those things where I just started trying to learn the financial statements, income statement, balance sheet, cash flows. And so what I would do from the start is just read the overview of what the business did. And then I would read like a few of the risk factors, and then I would just skip the rest, because to me, I was like, all these seem kind of boilerplate. Because even when I was in high school, reading a risk factor that said, hey, our stock price may go down from time to time because of non-fundamental reasons. I'm like, okay, well, yes, like I understand that. And so if that's one of the risk factors, then there's probably quite a few that are just standard boilerplate. Obviously, I'm doing that. You're probably going to miss the actual risks that you probably do want to read. So that's one thing, is actually teaching myself to read all of those risk factors. But it wasn't really anything like, oh, I'm starting to develop these patterns. I think if anything, the one thing I did learn is that I loved what I was doing. And it wasn't something where I was just, oh, it's kind of a hobby. I recognized early on that this is something I could do for a really long time, which I'm very hesitant to give myself like some sort of edge, even if it's informational or, quantitative, because there's people that are way smarter than me. But if there is an edge in understanding what is going to drive you for the rest of your life and what you're going to be passionate about for the rest of your life, if there is an edge in understanding that at an earlier age than others, then I think that there was something there for me, at least, because now I had the advantage of time and compounding, because I could start from an earlier age with a stronger passion base. And even if I'm not the smartest person, I can make up for a lot of that in just time spent learning if I start earlier than other people.
Got it. Hey, I would consider that a major edge, especially coming from someone who I didn't know what I was going to do until my dad said, "Hey, why don't you try the family business?" I'm like, okay, cool. Let me give it a shot. That's not to say I didn't know about stocks and microcaps and found it interesting, but I didn't know if like that was going to be my life by any means. So I always envy people like you that just knew right off the bat, like, okay, I love this, and not just treating it like a hobby. Treating it like this could be something bigger. And I mean, even for those who treat it like a hobby and then they fall into it, then it ends up being their career. That's amazing too. Don't get me wrong, but like,
well, and one thing,
it's pretty awesome when you're like,
and one thing too, it's not like, I said in high school or fifth grade, like, oh, this is what I want to do forever. And then I never did anything else. I had a winding loop to get to where I am now. Like I wanted to be, I always loved writing. So even from, as early as I could, I would send, request to the local newspaper to see if I could become a sports journalist there. And so I ended up writing a couple articles there. I just loved writing. So I actually went to college to try to become a journalist and a sports broadcaster. That didn't end up working for a lot of reasons, one of which I didn't have the GPA to get into the program that I wanted. And so that led me down a path of going into sports physiology and exercise physiology, because I was trying to think, well, I don't need to take all these school classes to study investing, because I just do that when I'm not doing class. So let me try to find something that could, pass the time, or, because you always have people telling you like what you should and shouldn't do. Yeah. Like there was so many people back then that were like, oh, you should do this. You shouldn't do this. You should do that. And, it was definitely not a straight line. It was a lot of ups and downs, and then always recognizing in the back of my mind that investing is really what I love.
Yo, that don't stop for your whole life. People telling you, oh, you should be doing this, or you should be doing that. That don't stop. And now you're engaged, dude. That don't stop.
Trust me, now it's just starting.
That was good stuff. All right, wait, hold on. So what sport were you were you doing journalist work for? Like what's your sport?
Well, so I played a bunch of sports, but I wrote about basketball. And there was at the local where I grew up, there was a new swim center that opened, and so they had me do an article on this new swim center. But when I was in high school, the other thing, like this whole podcasting thing too, is just kind of an extension of my passions, because in high school I started a sports radio station. I was just, hey, that'd be cool if we could broadcast baseball. And so what was nice is I actually got to leave when the baseball team left. So I would get to skip class, and I would go and commentate baseball, commentate basketball. And I did that for, I think, like the last year while I was in high school. So yeah.
That's so sick. Actually, funny enough, I was going to wear my Yankee jersey on this for our recording today. I decided against it because I couldn't find an undershirt. So you're lucky that I'm very disorganized and I didn't wear my Yankee jersey for.
Yeah. Well, as a Red Sox fan, at least in the AL, I appreciate that.
Oh, okay. Actually, Kevin Shea, whenever he comes on the roundtable, he always ribs me. Like whenever he wears his Boston Red Sox hat, I'm like, do I have to broadcast this right now? Come on, man. just take it off just for me. You got nice hair. But I thought you're a Nats fan though, aren't you? I thought you. Right? Yeah,
well, I love the Nats, but the Nats didn't come around until I think 2006. That's true. And I hated the Orioles after Cal Ripken left. he was my favorite player, and then he left, and I was like, I got no use for the Orioles. So I said, let me pick another team, and we were in Disney World when the Red Sox were playing the Yankees. I think it was like the ALCS or the ALDS. And I remember Johnny Depp was on the Red Sox, and it was the year that they
Johnny
basically
Depp?
broke the curse.
Hold on, Johnny Depp?
Or Johnny Damon, right?
Damon. That was good. That was a good one. Listen, I was just watching Pirates of the Caribbean last night too. Okay, man.
Yeah. Okay. Cool.
Yeah.
So, yeah, I remember that being in Disney World and watching that game and just thinking, you know what, like this is a cool team because I think they had Manny Ramirez on that team, Jason Varitek, Kevin Euclid or something. He had that weird, Euclid, that weird stance. I mean, that was a cool team, and I was just sitting there, I was like, you know what, I can root for them. And so, I mean, ever since then,
you should have looked at the Yankees roster and realized like that's actually a cool team.
I always hated the Yankees.
2006, I think we're thinking we got Mo, we got Posada still, Jeter's still kicking ass. I think Bernie was still playing in 2006. Yeah, I think Bernie was still playing.
Jeter's a cool dude.
There we go. I got to get my Jeter poster up. I got a Jeter poster that says, I thank God every day that I was a Yankee, the Joe DiMaggio line and all that.
Yeah.
Great. Anyways, all right, let's get back to investing. All right. So you said, as you said, took a couple loops to get to where we're at today. So catch us up. How did we get to where you're at today at MacroOps and then also launching Value Hive?
So graduated, while I was in college, I had the privilege of working at an RIA in Baltimore. The company was called CIC Wealth, for anybody interested. I had the absolute best boss. His name was Michael, and he took me in. I was an intern, and I had no experience other than, hey, I really like investing, and I was starting to write just like a private blog, my ideas, and so I sent him those, and he started me basically from ground one or from ground zero, and I would go in and it wasn't paid. So he was like, hey, you know what? I'm just gonna let you know this is not a paid internship. And I was like, that's fine. Like, I just want to learn. And every day when I was in there, I could just go into his office and pitch him an idea. And he would sit down and he'd say, all right, this is what I like. This is what I don't like. Go back to the drawing board, check this out. And just the lessons that I got were incredibly, just the idea that you've got this random intern in myself that could go into, the PM's office basically and just say, hey, here's what I'm thinking about these different companies, and have him sit down and really, really talk to you and really want you to succeed. I, could never repay him enough. And so I worked there for free while I was in college. And then I graduated, I went back there, worked full time for about 1.5 years, 2 years. And then during that time, I was interested in doing work with MacroOps, which is a global macro research firm based out of Austin, Texas. Alex Barrow is one of the co-founders, probably the smartest all-around trader that I've ever met in my life. And so to be able to work for him was incredible. And I cold emailed them. This is actually a funny story. So I brought Alex onto my podcast, and he knew the story better than I did, which is funny because it does not paint me in a good light. So that's probably why I subconsciously don't remember it. But how it goes is I took one of their courses on price action, and I took it and I found it to be rudimentary, at least for where I was as a trader. The course was awesome. I found it to be rudimentary. And so I emailed them back and I said, hey guys, I love what you're doing, but I took this course and it was just way too basic for me. Can I have my money back? And in that same breath, like I had the audacity to say, by the way, like, do you guys need any help? Like, I would love to work with you guys. and it started there. I was just doing some, freelance, unpaid research work for Alex. And one thing led to another. And after a couple of years, the team had enough money and MacroOps was doing well enough to bring me on full time. And that was in September of 2019, I believe. And I guess, how they say the rest is history. We've got the swag now, wearing the nice MacroOps quarter zip. We are growing pretty fast. We've actually added 2 new guys to our team, 2 new interns, and it's just been an incredible opportunity. I can't thank Alex enough for giving me the chance. Cause again, I'm this guy. I don't have like the pedigree, like, oh, hey, I went to, Harvard Business School, or, hey, I went to, an Ivy League college, and then I did 2 years in investment banking, and I've got all these credentials. There's just, hey, I'm really passionate about investing. I'm probably going to work harder than most people because I love what I do, and I hope you guys can give me a shot. And that's what it was. And so I've been doing that since September of 2019. The podcast I've been doing since December of 2020, I think. And I've, knock on wood, I've been able to release a new episode, I think, every week since then, which is nuts. But then when I think about all the episodes that you've released, I'm like, it's not really that much. So
dude, it's, hey man, hey, you have plenty of episodes ahead of you, to say the least.
I hope so. I actually think the podcast is gaining a bit of momentum. We've got some cool partners behind us for these next few months, some really cool products that have decided to sponsor, and I'm just excited about learning from new people.
Hell yeah, that's what it's all about. And you know what? At the end of the, I think I made this point on your show, or maybe I say this way too much now, but like, it's not to say that blogs and now Substack are going away. In fact, especially with Substack now, I would say that, still investment writing and blogging it's created a whole new platform. I think it's incredible. I got to subscribe to some more of these Substacks. Actually, I don't subscribe to enough of them, but podcasting has really filled a nice gap because it's really efficient. For people to share their ideas, get their ideas out there in a timely manner. And there's so many good quality shows with good quality hosts. Not saying I'm one of them. You are one of them for sure. Maybe, I don't know, at some point, who knows? But
at some point, I wouldn't go that far.
but at the end of the day, like I think for us as podcasters, hosts, like I don't ever get as worried as I used to. Like I used to do it every other week because, well, I'm also in a niche space with microcap. So I was like, all right, I don't know. There's not that many microcap people to like talk about, or like the people that even have some exposure. They're like, well, I don't want to go on a microcap podcast and just talk about microcap strategy because we do so much stuff. But once you kind of open it up, that's when you're like, all right, there's more people, out there.
Yeah. Well, it's funny. It's funny you say that because the internet rewards niche communities, and they really reward niche behavior and niche interests. And you can see that with Fool All the Time on Twitter. He's created an ecosystem for himself around semiconductors, and the only way he was able to do that is by ruthlessly focusing on one specific industry, and that's semiconductors. And so you have that part, right? The internet rewards niche. But on the other side, you have like, what do you actually want to do? And so for me personally, like as much as finding a niche and really diving into that would be beneficial from an internet standpoint, maybe even economically, I have too broad of an interest in too many things to probably define myself into one niche. And again, like, from a business standpoint, that's probably not the optimal decision. But from a passion standpoint and what I love doing, it's one of the ways that just keeps me excited, because I can write about ideas in Brazil for 1 month and then the next month completely flip the script and go to Japan and write about different ideas in Japan. And stuff like that excites me, but there is a tangible trade-off to that I'm well aware of.
100%. But at the same time, and literally as you just said, like, you can still focus on some niches that are interesting to you and create, back to back content, at least enough of it that it'll still, you'll still get rewarded as long as the work and the content's quality, right? Like if you're just throwing stuff out there just to say like, oh, that niche is starting to get a little something, you just throw some content at it. You're not going to get rewarded for it, but like and you guys do quality stuff. So it's not like you're going to still satisfy that urge while also being able to look at some of the things that you're also interested in.
Yeah, exactly.
Yeah. All right, dude. Well, let's get into your investing philosophy a little bit. Tell me, like, what the podcast is called Value Hive Podcast. So I'm sure most people know you as a quote unquote value investor, but
Mm-hmm.
define yourself for our audience.
Yeah, I really like the name Value Hive, but I hate just the idea of like defining someone as a value investor. And I think it was, shoot, what podcast did I just listen to? I think it was Patrick O'Shaughnessy's with Howard Marks, or it was Ho Nam's on the Acquired podcast. But one of those, I heard the phrase like, I'm not a growth investor, I'm not a value investor, I'm just an investor. And for me, like that's it. Like I'm just an investor. And what I try to do is I try to find businesses that excite me, uh, where the companies satisfy their customers and the customers delight in their products and services. And that company is run by sensible management that makes smart decisions. And what I'm trying to do then is identify prices at which the company is trading ridiculously cheap compared to what I think it's going to be worth in the next 5, 10, 15 years. And so from a high level, that's pretty much what it is. And I came about that thesis again in kind of a roundabout way where, I used to look for low price to earnings, low price to book, low price to free cash flow, and really focus on the quantitative metrics. And I mean, while all that found some interesting ideas, I think in general, that's not where public markets are headed in the future. And so if you think about, trying to invert the end game for public markets, one of my opinions is that the best public market investors will invariably look like the best VCs out there, because markets are going to become much more efficient over time. And it's just going to accelerate into its efficiency as technology, gets better and people have more of the same information at the same time. And so for me, the edge, and by the way, I stole a lot of this from Cliff Sosin of CES Investment Partners, because I think at the end game, what you're going to have is the best investors are those that can reasonably predict the future of a business better than other people. And then that prediction of that business in the future has a much higher value than the price that they're paying today. And so that's obviously a much more like VC approach, because in VC, whether it's early stage, Series A, B, C, you've got a product, you've got a team, maybe you've got product market fit, maybe you've got some revenues, starting to see these signs of network effects, but you really don't know. And if you judge on current financials, or let's say like last 12 months, that's going to be a completely different picture than the business than what the business is actually going to be in 3 to 5 years. And so that's kind of been my ethos, and kind of my North Star is saying, okay, if this is the end game, and if the best public market investors are actually going to look like VCs, then what do I need to do, and how do I need to analyze these businesses going forward? And so that's why I spend, now I spend less time on purely quantitative metrics, and I really try to understand what problem this business solves for its customers. And the important thing to keep in mind there's this book called Crossing the Chasm by, who is that by? Let me check it out. But the book basically by Jeffrey Moore, and I wrote a book review on it. And the central theme of Crossing the Chasm is it's trying to understand how early stage technology companies penetrate their early niche markets, those early innovator customers, and then make the transition from the early stage innovative customers to the early majority and the late majority markets. And when I read that book, it just reemphasized the point of trying to find companies that solve real problems, and the problems that it solves for those customers, even if it's a small number of customers at first, it's a very large problem for them. Because if it's a very large problem for that small batch of customers, if the company can find a way to scale that from there, then you're going to have just this beautiful, Lollapalooza effect where it solves a lot of the same problems for the majority of people at that point.
I think that, by the way, that was so, Brandon, that was so eloquently said. And I'm being serious. Like that was,
we didn't have an outline for this, by the way. So all this is on the top.
But yeah, no, look, listen, I'm not Brandon Beylo prep. And I used to be a little bit more, but now like I like to keep it more free flowing, but anyways, Everything you just said, I very much agree with. Especially because one company that you just wrote about very much fits that model. I know, and it's the company Figs. Mm-hmm. Full disclosure, I'm not a shareholder, but
neither am I.
My wife loves Figs. In fact, I'm on their mailing list because I think when she bought it the first time, I now get every marketing email. Mm-hmm. But she's a nurse, and that's all she wears is the Fig stuff, and she says it's the most comfortable, it's affordably priced, so how does a company like Figs fit sort of what you're talking about? And you said you're not a shareholder, right?
I'm not a shareholder. No, I wish I was though. when I wrote about it, because the stock's done nothing but rip. Let me see where it is now. Yeah, it's at 46, IPO'd at 28. And I think I released the write-up on May 26th. So it was a couple days before the IPO. But I thought even kind of at the IPO price, and maybe we can get into this later, but even at the IPO price from a valuation perspective, it just wasn't something that I was willing to buy at that point. But so you asked basically, how does Figs fit into kind of my investment philosophy? Okay, so
as an example.
Yeah, as an example. So first things right is I try to find various case studies, you can call them, maybe mental models of companies and themes that have worked in the past. And one of the themes that I always like to fall back on is cult stocks, and really trying to understand like the power of cults and brands. And I wrote about this in the Figs piece itself, but what's interesting about brands and cults is that there's certain types of products that really beget cult mentality. So for instance, Yeti is a great example of a cult brand that I've been wrong on in the past. Like I tried to short it once, I see your Yeti. I tried to short it once based on technicals, got stopped out. And, I just realized that there are certain products that have cultability. I don't even think that that's a word, but, and what are they at the end of the day?
I love your next book.
So at the end of the day, these cult products are status symbols, and Packy McCormick does a great job of explaining the idea of, earning currency in kind of the social status game. And the way he does it is kind of through angel investing, where you're not investing because of the business, but just because you get social status points. And so I thought about that framework through the lens of brands and what products have that cult-like capability to earn social status points. And Yeti was a great one, because if you think about Yeti, like, what do you do with your Yeti when you're with it? Like, if you've got a big cooler, like, why are you using the big cooler? It's probably because you're at a party with your friends, or it's probably because you're out on a fishing trip with your, with your buddies, or you're at a tailgate. And what do all those events have in common? You get to interact with other people. Other people get to see you. They see you with the Yeti cooler and they say, wow, this guy's got enough money to buy a $500 cooler. And whether you agree that coolers should be that expensive or not isn't the point. The fact is, it's a social status symbol, which is funny because you wouldn't think coolers are like that. But they are, and Yeti's done a great job of creating this brand around that. And so now they've got, dog bowls, and they've got, this whole product line where if you buy Yeti, what you're saying is, I value, some of these things, and I have enough discretionary income to spend $80 on a freaking dog bowl when I could just use, a Tupperware bin for $2. But, and so, I thought about that, and then I married that social status symbol game with cult-like brands like Lululemon, which is kind of a classic example. So, Lululemon, there's really nothing different. I'm not a shareholder. Lululemon is, just yoga pants. They make apparel. Not really anything significantly different than, say, Nike, Under Armour, Adidas. But what they did do a great job at is make excellent products that fit really well, and they feel really good. And so, as someone that doesn't like to spend money on clothes for myself, I actually used to work at Lululemon, and we had to buy clothes there. And so I bought some pants, I bought some shorts, and they are really
great pants. Great. I love their pants.
The ABC pants are amazing.
The best.
And
I wear them all the time.
Yeah. And so I thought, okay, you've got this cult-like phenomenon around Lululemon, around their products, because not only did they create a great product, but they created this great brand around, hey, we are promoting athletics. We're promoting, people that do yoga, people that bike, everybody that wants to be active. So when you put on Lululemon, you're not just putting on clothes. What you're doing is you're saying, I am an athletic person. I engage in athletic activities and I care about maintaining physical performance and I care about my body. Like that's what you're saying. And so I married that social status symbol of Yeti with this cult-like behavior of Lululemon. I thought, well, Figs kind of marries both of these really well. And so what is Figs? Figs is, to put it simply, Figs is just the Lululemon of scrubs, honestly. And I hate using other companies to kind of describe other ones, but they are high-end scrubs that go direct to consumer. So they sell direct to consumer, and they also partner with hospitals and colleges and stuff like that. And so, what you get is you get a premium scrub that you can wear. And so I wrote about why scrubs is perfect for this, for this social status symbol. And so let me see if I can find it here. Let's see.
I'm really digging that this is what we're getting into for our podcast today. Because this is a fascinating topic.
A lot of this comes from someone I had on the podcast, and her name is like escaping me. But she's really great around brands, and I hope to figure out the name at the end. So healthcare apparel, there and Figs outline this in their S1, but there's really 6 reasons why healthcare apparel is kind of perfect for this cult-like thing. So, one, you've got commoditized products, you've got brand obscurity, antiquated distribution, there's channel conflict, customer separation, and challenge margins. So to kind of roll through these, all at once, commoditized products, no one really cares in general what scrubs you have. So it's not like, oh, did you get the Cintas scrubs, which, not a shareholder in Cintas. Did you get those scrubs or did you get, brand XYZ? Like no one really cares. You just kind of get the scrubs and you buy the scrubs because you have to. And because it's a commoditized product at that point, you can't really compete on price because there's no brand there, which leads into brand obscurity. Again, I already said it. No one really cares about what brand of scrubs you wear, at least not until, kind of Figs came onto the scene. And so what that did, though, is if you don't have brand power and if you just have a commodity product, then you don't have any pricing power with your distributors or even with your customers. And so with a lot of these scrub manufacturers, they're just kind of intermediaries where you've got a third-party manufacturer that's making these scrubs, and then this brand is just selling them through to the end consumers. And since there's no brand, there's no brand affinity and every product is pretty much the same, there's no pricing power there. And so what's nice is Figs kind of has a direct to consumer approach here. And so what they do is they say, look, you can buy through us, or, if we partner with colleges or hospitals, you can buy through them. And this kind of makes sense because if you want to buy scrubs, hospital workers, they don't do like the traditional 9 to 5. So when they're trying to buy scrubs, they can't really buy them during normal shopping hours. And so the great thing about Figs is, whether you get off at midnight or 2 a.m., you can just go to the website and just, directly order through the website. And so, they solve that need there. And at the end of the day, though, what matters in all of this is, does the company make a good product and do its customers love it? And do its customers feel like they're part, or do the customers feel like the company cares about them? And it's funny because I'm saying all these things, and if you would have asked me like a year or 2 years ago, if I would be thinking about companies in this way, I would have been like, no, all of that stuff is meaningless. It's just because you have no idea what the true value of the business is. But these are all these intangible things that, for better or for worse, I've really tried to adopt and really try to actually study, because I think, again, going back to the end game, what's going to matter? It's going to be the stuff that's not quantifiable. It's the stuff that algos can't pick up. And so a good way to stress test all this is just to see customer reviews and just watch YouTube videos. And my sister is a nurse here at the local hospital, and she's got friends, and my brother has friends that are in, the hospital, healthcare business. And so all I did is I just asked around. I said, hey, have you guys heard of figs? Like, what do you think? And every single answer was yes, they're super popular. They're crazy expensive, but everybody loves them. I'm like, okay, that's kind of what I thought. And then you read the story about their founders and how the founders started, selling these things out of the back of a van. And what's nice, and just to kind of go back to this Crossing the Chasm book that I mentioned earlier, where you're trying to solve a small problem for one person. The founder, one of the co-founders of Figs, she started the company because her friend, who was a healthcare professional, complained about the scrubs that she wore. She said, hey, my scrubs, they're super boxy. They don't really feel good. I don't really feel good wearing them. And I think they were getting coffee. And she's like, you know what? I'm going to make the best scrub possible for you. And it goes back to this whole thing of like solving one person's problem. And her problem ended up being the same problem that millions of other healthcare professionals probably go through as well. And so they literally sold these scrubs out of the back of vans in hospitals. And from there, it's like the growth has been exponential. And so you have a product that works, you have a product that people love, and you have a product that's so good where people are willing to be ambassadors for the product. And so it's just an incredible business. And again, it's one of these where, could it be the next Lululemon? Probably. Healthcare apparel is a huge industry where no one is trying to do what Figs is doing, which is create a brand around certain apparel. And, there are definitely bear cases here, which we can get into, but I'm going to pause to take a drink because my mouth is so dry.
Go for it. But it's interesting that we talk about when at the very beginning I said it was affordable, and then some of the feedback, and my wife got the same, is that and she would even say it is expensive. But when you think about quality, this is something my wife tells me all the time, you can't put a price on quality. If it's something that's well made and comfortable and good, even if it's more expensive, even exponentially more expensive than what its competitor is, if that means it's going to last a little bit longer, then you're ultimately saving in the long run. Yeah. Well, and that's what I noticed with Figs,
Well, so, and the other thing too, and I know, forgive me if I'm kind of jumping all over the place, but
let's go. It's all good. We got no time. Let's go.
Again, we go back to social status, and the healthcare profession is kind of the perfect playground or sandbox, if you will, to show off social status. And what do I mean by that? Everybody there works together, usually in the same shift. That person, you're working 12 to 24-hour shifts with them. And from the outside looking in, and again, my sister kind of tells me some of these stories, but from the outside looking in, if COVID has done anything to this community, it's actually strengthened their bond with each other. Because these people really are heroes. They were in there working day in and day out when a lot of us were just comfortably cooped up in our homes. They were the first to get the vaccines and all that stuff. And so you have this tight knit community. And the other thing you have is interaction with a lot of highly paid professionals, anesthesiologists, surgeons, all these people. They have teams of doctors, nurses, and staffs, that go all along the healthcare profession totem pole. And when you interact with all these people on a daily basis, you enter into, again, the social status game. So you're around other people. And so when you wear Figs and you go into work, people are like, oh, hey, what are you wearing? You're like, oh, it's Figs. It's this really nice scrubs product. And it's the best scrubs I've ever worn. I feel comfortable in them all day. They actually look really nice. I can wear them out and I feel good about wearing them out. And what that does, again, it gives you more social status points because that person goes home and they're like, wow, okay, let me check them out. And then they see, how much they cost. And like, oh, wow, well, if that person values their scrubs that much and kind of values what they wear, then maybe I should too, because I work with them and I do the same thing as they do. And there is something to be said about paying for quality when you work 12 to 24 hours in the same clothes. Again, I've never worn scrubs, but I do see them, kind of the old school versus, figs is the new school. And I think the future of what most healthcare professionals are going to wear is going to look more like figs, whether figs ends up being the winner or not. I think it's going to look more like figs because what you're going to have is the company's going to end up branching off into other areas of apparel. So not just scrubs, but I think they call it like health leisure or something, or like scrub leisure, where it's the same figs brand, but it's now like workout clothes, or it's like, your business casual. And it's creating this brand around, hey, I'm a healthcare professional. Because when you put on figs, what are you saying? I belong to this community of healthcare professionals, and this company whose clothes I wear, they do nothing but love and support the community that I'm a part of. And like that creates a really sticky brand in what a lot of people see as just a commoditized product.
Mm-hmm. And also, like, if you think about it too, when it comes to, and again, I'm not a shareholder, own it via my wife, is like, it would be really interesting to see if they start to do that, add on that extra line where, because as both, spouses of people in healthcare, family members like yourself of people in healthcare, like I see the figs, like it's not much of a stretch from, the Lululemon pants, and if their marketing is like, hey, these are high quality, comfortable pants or clothing that people who work on their feet 12 hours a day, 12 to 24 hours a day, what makes you think that this isn't comfortable for you to just wear while you're sitting here recording a podcast talking about finance stuff? That's not a big stretch.
No, it's not. But I think one of the things that's kind of a little iffy about this is you want them to, again, we kind of go back to niche, like you want them to serve that community and just have it bleed out there, because again, healthcare apparel is a $12 billion market. It's huge. And just to kind of put some numbers in perspective. So in 2020, Figs did about 263 million in revenue. And again, this is a profitable company. So 263 million in revenue, 72% gross margin, and about 26% adjusted EBITDA margin. So you've got an incredible business that's leveraging that brand at 72% gross margin. That's incredible. And I think I actually compare it to Lululemon. Yeah, so Lululemon does about 56% gross margin. Stitch Fix does 44%, but Stitch Fix isn't a straight comparison. That's more for its direct to consumer brand. So you've got this business that can grow a lot in its current market. It doesn't need to really expand beyond healthcare apparel. So what would make me worried, again, if I was a shareholder, which I'm not, is this company trying to diversify too quickly? Because they don't really need to. They have, again, I think it's 2% of the total apparel market at this point. So they've got 2% market share, and I mean, they could double their market share in clothes. Get to $1 billion, or they could get to $1 billion in sales and be still less than 10% of the entire market.
The curse of being public.
I don't know, but let's
hope not.
Yeah, it's such an interesting opportunity. And then again, like from a valuation perspective, they IPO'd at roughly 10 times current sales. So that's why I didn't buy. But again, if you look out far enough, maybe 10 times sales is actually pretty cheap, but I don't want to make a bet based on a company being valued at 10 times sales, especially when I could probably be patient and get it for something less than that.
Hey, Brandon, I think we covered figs, but from coming off this conversation about figs, what commoditized industries or sectors do you think have this potential? Come on, let's jam. Let's do this.
This is such an interesting concept, and it's something I
didn't even have to finish. I didn't even have to finish the question. You knew what I was going.
Well, yeah. It's fun because like that's such an interesting thought experiment. Because again, like you look at another recent IPO, which everyone has probably known, is Oatly. Again, not a shareholder.
Sorry.
And
full disclosure, we bought it. It was disgusting. It did not. And we're down with the experimental. We'll try every other kind of milk and this and that and the other thing. It was my cup.
Yeah. So, again, we're talking about brands, but we're also talking about brands that have the ability to turn into cults, because those two things aren't the same. And so I am going to read something from the Figs report that I did, and because I think it explains it better than I could. So here it is from the snippet of the article, and you can kind of link it in the show notes if you want. So I said the recipe for cult-like success is simple. You take a commoditized item, cars, workout clothes, stationary bikes, and coolers, and make it into a social status symbol. Now you just don't drive any vehicle. You drive a Tesla. You're not working out in sweats, but Lulu gear. That stationary bike, it's not a clothes hanger. It's a Peloton, a portal into the community of bike fitness freaks. And then if you remove the brand, you kill the cult. You kill the cult. But here's the kicker. Not every commodity product can or should be a cult. Cults form around sociable products, items you can bring to a friend's house or post on Instagram. Nobody's hashtagging their latest toilet paper purchase, and for good reason. We only share things that give us points in life's never-ending social status game. And so, like, that whole theme is a reason why I don't think a brand like Oatly actually has staying power or could become a cult. Again, I don't live in California. I don't live in Oregon, where you see some of these more esoteric cult-like groups hang out around oat milk. But from a larger market perspective, oat milk isn't a sociable product. Like, milk isn't something where you guys hang out, you get together, and you're like, oh my gosh, like, he's got Oatly in his fridge. Honey, he's got Oatly in his fridge. Like, can you see that? Like, we got to go get some. Like, it's just not that way. Because again, it doesn't create this sort of social status the way a Yeti cooler does or the way Peloton does. Even relatively speaking, Oatly might be as expensive as a Peloton bike in its same market.
But doesn't that just, like all those companies that you just mentioned, by the way, are you a shareholder in any of those?
No.
Okay, good. All right. But the one interesting thing that you mentioned about all those, and like, you can say what you will about the company's balance sheet, all that kind of stuff. Like that we're not talking about that right now. We're talking about the quality of that product. Like, everyone probably would agree that all those products are high quality. Like, I've been in a Tesla. It's awesome. Not a shareholder. I own a Peloton. It's awesome. Not a shareholder. I'm not a shareholder in any of these names either.
Yeah.
Yeti. We have Yetis. They're awesome. Not a shareholder. So like, it speaks more to the quality. And like we just said with Oatly, I mean, I'm not trying to personalize everything here, because there are people that probably like Oatly and think it's tasty, but it's when a product has a universal, like, this is awesome approval, they have a better shot, So I would push back and not on the Oatly case in saying that, like, maybe that is just the product, that maybe it's not.
Yeah, that's a good point.
Like, it might just not be that good.
Yeah. And I guess, from a relative perspective, it kind of bodes a question of, is this product then like 5 to 10 times better than next comparable? And I think in a company like Figs, you can say, like, okay, like, this product is way better than other scrubs. And you could say that, whether it's Lululemon gear versus, your traditional, like, it's comparable at the time when it founded, it was way better than anything else. The Peloton is way better than a lot of the comparables out there. Is Oatly way better than other milks? No, like, it's just not.
You can make your own oat milk at home, and it will. I would say 100% better than whatever. And also, like, especially, this is my own personal opinion again, like, when it comes to like those esoteric or alternative milks and alternative product, like even like Impossible Meat or Beyond Meat and stuff like that. Like, you got to read the labels too. Like that, I would argue your point on, does it have potential cult-like status vis-a-vis, showing that it's showing some kind of social status for you, is like, people might think that when it comes to buying some of those products, but then you read some of the labels and you see the crap that's in it. That's when you end up having to ask that question yourself. Well, like, all right, do I really care about social status, or do I want to put things in my body that are just not good for you potentially? So like, I think I would agree that it's probably harder on the consumable side, but if you can create a consumables product that can break through that has mass appeal, then damn, like I would argue that probably has even more staying power, more cult-like in social status than any of the other commoditized.
Well, it's actually interesting you brought that up. There was a company, and I'm not a shareholder, but Fever Tree Drinks, FEVR, trades on the London Stock Exchange, and they're a company that they basically do a lot of like spirits and tonic waters for mixed drinks. And again, it's kind of that perfect example of, is Fever Tree's tonic water 5 to 10x better than a lot of the competitors out there? And the answer is yes. And what's interesting about consumables, and you brought up, kind of taste, is our brains actually wire us to prefer certain tastes, and we get very comfortable with certain tastes. And so there is this kind of breakthrough that can happen if you're a consumables product, that if you're that much better, and people continue to eat or drink or kind of use that product, their brain is going to tell them that this is what they want, because the brain's going to have those patterns that are going to say, okay, this is the flavor, we really like this flavor, so kind of keep feeding us this flavor. And I don't have the write-up in front of me, but there's some science behind that, saying that once your brain prefers a certain taste, it's kind of hard to kick that. Again, it goes back to like Coke versus Pepsi. People have these patterns in their brain that they prefer one or the other, and they can't tell you necessarily why, but on a neurological level, there's something going on there. And if you can pair that then with a brand that again is around a social status symbol, then I think you've got the makings of something really powerful. But I will caveat all of this with saying, like, unit economics and the business actually matters. So what I really liked about this is they're profitable. They've got 70% margins. They've got almost 30% EBITDA margins, and they're making money. And they've made money early on, and they're highly profitable, highly successful. And that's why, I always get worried when you see these consumables companies like Oatly or Impossible Burger saying, hey, we're going to make it up in volume. It's like, well, that's kind of tough. Like, if on a unit economic basis you're not working, and there's not really much different between you and the next closest competitor, what good is your brand? And then what premium are you allowed to charge if no one sees your brand as being worth that much? And then that's when you get into kind of this, negative feedback loop. And so, it matters. Profitability will eventually matter. And that's going to show if your brand actually has staying power, and if your product is actually that much better than everybody else's.
Well, isn't that the dream setup, right? They're 70% margins, profitable, and they're still barely hitting the tip of the iceberg. I mean, that's,
or even if they're not profitable, if you can lay out a case why they can be over the next 3 to 5 years,
right?
Because again, on like a unit economic level, they could be profitable, but on a, fully 12-month basis, if you look at the financials, they could be unprofitable. Right. So, there's, if it's not there, there's got to be a compelling case and a logical case as to when and why they can get there.
It's funny you bring up that company who I'd never heard of before. What was it? Fever Tree? Yeah, I hadn't heard of that one before. But speaking of consumables in the drink space, it seemed like there's a lot. It also seems maybe a little easier to break in, not so much on the milk side, but on the spirit side, like June Shine. That company
I've never heard of them.
You're going to be in San Diego next week. So they're everywhere in San Diego.
Well, it's tough because I don't drink personally. So I have I can't speak to all these alcoholic beverages stuff, but I do know, again, Celsius is another great one to talk about brands and the power of brands. Like Connor Haley from AltaFox freaking nailed that thesis. What else is new? But, again, if you go back to these mental models, and, I don't know if Connor was thinking about Monster Energy during that time, but, you look at how successful Monster was, and you can understand that beneath these products and beneath these brands in these industries is the potential for something to become a cult. And, fitness is a great one because people are drinking Celsius. It's like, oh, hey, I drink Celsius. Again, I care about my body. I want to feel good about what I put into my body. It tastes great. I never truly understood why Celsius went up as much as it did, because that space is again, it's so crowded. And is Celsius really that much better than, say, Bang Energy or Rain Energy or the new Jocko Fuels, which are now my favorite? Not a sponsor. Wish I will be one day, but yeah, I mean, it's just fun though. Like it's fun to study these brands and to see why they take off from someone that was purely focused on quantitative to move all the way over here. It's been the most fun for me because now I can do both and I can feel comfortable doing both.
It's funny you bring up the Celsius example because I remember them seeing at a microcap conference years ago, and my first instinct was like, like, even if this is somewhat good, like this is like the most packed competitive space out there, So it's been incredible to see their run. I'm full disclosure, I'm not a shareholder. We've been saying that a lot today. I think we wanted to say that today. I think that was our goal is to get the record for how many times. It's like
my goal is just to not own the companies that end up doing the best because
of course, right. You know what space I've been thinking about a lot as we're talking through this and thinking about it is CBD, because I feel like that has, like, it's very similar to the energy drink space in that, like, it's just so crowded. It's how much marketing dollars can you throw at this thing? How many sponsored athletes can you get? It's pretty interesting to see what's been going on in the CBD space and like how you're starting to see a lot of the same things that was going on in energy drinks, 10 years ago, 10, 15 years ago,
Yep.
So it'll be interesting to see like who ends up winning from that. And
yeah, I know it's super interesting. I mean, I don't have a horse in this. Yeah. I don't have a horse in this race. And from a non-user perspective, I would bet that there is some sort of taste preference or some sort of preference, again, kind of similar to, so like, kind of similar to drinks where, let's say you buy, marijuana from this one company and, you really like that, how it tastes, I guess how it's, look, I'm such a novice, like how it smells, how it feels, blah, 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 like whatever, people that enjoy that product care about, like if it's really that good, then I think that you've got the recipe there. What I wonder though is I think the product taste or the preference recommendation isn't in necessarily the brand itself, but in the actual like variant of the marijuana like leaf itself, if that makes sense. So like it's not the company that's really changing like the taste. It's just like, oh, you got this different version, like this different type of marijuana from somewhere else. And it's not the brand that did it, but it's just kind of a different strand. Again, this is way outside my circle of competence, but like that's kind of where my brain goes.
My brain goes similarly in that, like, you just want to make, like, here the two things that are most important, at least from my thinking when it comes to like CBD and or in the cannabis space on the consumer side, is enough variance. You have all the different options potential out there, high THC content, low THC content, high, the other one, and on top of which convenience, being able to acquire it in a very easy, efficient way. Those seem to be the two most, but then again, I'm like you, I'm not anymore.
It's gonna take me a long time to try to get a circle of competence around which brand's gonna work at this point. I have no idea.
100%. I'm doing it injustice, man. Look, at the end of your pod, you said the one person you want to meet in history. I said Bob Marley. I should know more. But
you giving me the Latin names for these plants, man.
Yeah, I know, serious. All right, dude. Well, look, we could jam for hours, so I'm gonna try and close this up here. But I'd be remiss if I didn't ask you my favorite question that I ask everybody on here, and I gotta have you back on because I had this whole thing where I wanted to ask you about lessons learned from your podcast guests and all that stuff. But we're going on an hour and a half, so you'll come back and we'll do that. But cool, but as you know, my favorite question I always ask, what investing experience would you say impacted you the most in your career?
So recently, I'll give you two. I'll give you one good one and one bad one. And I'll try to make these quick. The bad one was Target Hospitality. Ticker is TH. And I'm not a shareholder, but I bought this company. I actually pitched it in front of an entire group of my favorite investors at this really nice investors conference. And it went from $9 when I pitched it down to, it went from 9 to 85 cents. So a good 90% precipice. And the reason why I learned a lot from this business is I learned that I am not at all remotely capable of investing and understanding these cyclical type commodity linked businesses. I think I can trade them pretty well based on technicals, but when it comes to the fundamentals, I have absolutely no idea. And this company made me realize that painfully. I was lucky enough to sell. I think I sold around 7 or 8. So I didn't write it all the way down, but the lesson is still very painful because this was the stock that I pitched in front of all of my favorite investors at this big conference. And, all of them are now looking back over the year oh, look, what stock did Brandon pitch? Oh, he pitched one that went from $9 to 90 cents. That's fantastic. Let me know your next one so I can short it. But it reemphasized the point of circle of competence and not necessarily knowing what you're really, really good at, but really knowing the edges of that boundary. Because I think, I always got to quote Charlie Munger at least once is I think if you focus on not doing too many stupid things, you don't have to worry about really nailing the big ones. Because if you reduce that left tail and, your worst losses get less and less bad, that's going to go so far for you. And that was an example that just reemphasized hey, dude, stay away from commodity linked products. That's not your area. That's your batter's zone where you're swinging 0.005. So that was
stay away from commodity linked products that don't have potential for cult like status.
Yeah.
Right.
That's pretty much it. And then the good one, and I was on Maj's podcast actually talking about this, I think it was last year, is Ammo Inc. POW. So full disclosure, I am still a shareholder. It's actually my largest position. I think it's over 20% of my book at this point. I was buying that stock at around $1.75 was when I first started buying. And it's done well since. It's trading close to $9 now. And that was, again, a product that I thought I understood. And I thought that their product was 5 to 10 times better than anything on the market. And they had a cult-like following around their retail product. It was more expensive and they could charge higher margin on the retail side, but people kept buying. And if you looked at the reviews, people said, yes, it's expensive, but it's the most fun ammo I've ever shot in my life. And the CEO is a great operator. He's had past success. He built a NASCAR, toy figurine business, 10x'd its sales in I think less than 10 years, sold that business, then went and won the lottery in Arizona, and then started this company. And it was one where I bet initially, and I made it a decent sized position, but more importantly is I kept adding as the story improved and as management executed, which Ian Castle talks about this a lot, is knowing when to add to your winners and always trying to add to your winners and cutting your losers. And I always do a good job, or I try to always do a good job of cutting my losers. Like I think I do that pretty well. What I don't do well is adding to my winners when they're working, because I see higher cost basis, and I see kind of if I increase my cost basis too much, then my returns aren't going to look as good. And if the stock really reverses, then I could be in the negative, as opposed to, entering at $1.75 instead of now my cost basis is, $3 or so. But I tried to get over that with this stock. And I said, look, if this company keeps executing, like they are proving to me that they are worthy of more of my capital, and management has proved to me that they are worthy to have more of my investment, because I think that they're going to continue to do good things. And with that said, the better they do and the faster they grow, and this company's grown crazy, like 300% year-over-year growth in revenue. They're probably going to be EBITDA profitable by next quarter for the first time ever. And they're doing all the right things. And so, a lot of it was just, kind of hold my nose and buy more, because they're executing, and it wasn't comfortable. Like I wish I could say like, oh, it was so easy. Like they're working, things are going well. I just kept buying. It was like, no, like I didn't really want to, but I'm trying to get better at that. And luckily the thesis is playing out well. I really think that the company is still undervalued compared to what I think it's worth. I think it's going to be a much bigger business in the next 12 to 18 months. And again, kind of checked off where I think I have a base level understanding of cult products and understanding those types of dynamics.
All right. So to close this out, what advice do you have for new investors out there? Just in general, how should they think about entering the market? How should they think about stocks? What's your advice?
That's a good question. Let's see. I would say to not focus so much on the quantitative business aspects, like the quantitative financials, but to really try to understand why customers love companies that solve specific problems. Because if you can understand that, then the accounting numbers are very simple. You can teach yourself the accounting rather quickly. But what takes a lot of time is developing an understanding on the tremendous impact, both financial and business wise, that a company can have if they really solve a big problem for a customer. And if you can understand that, and then if you can kind of understand the dynamics of how those customers how those customers interact with the company at the early stage, and then kind of all the way through the life cycle. That's why I think that book, Crossing the Chasm, is so important, because it kind of walks you through these early stage companies. And then from there, I would say, study the best investors. I mean, it's pretty simple, but study the Buffetts, the Greenblatts. I would put Ho Nam of Altos Capital in that category from a venture perspective. One thing I wish I did earlier was actually study the earlier stage businesses. So whether that's the microcaps or the private businesses, and what makes them tick, and really focus on case studies. So taking companies that have delivered 10 baggers or so in the last 10 to 20 years, what made them be as successful as they were, and then just really understand those case studies, and then those become mental models for the companies that you study going forward. So if someone understood Lululemon and then they stumbled upon figs, they already have that mental toolkit of, hey, I know what a cult-like apparel company looks like, and I know how this works if it works well. And so you can then develop a model and say, okay, then I kind of know how to track these. All the accounting stuff, like you can teach yourself. It's not too hard. But what is hard is really understanding the customer company relationship and how powerful that is.
Very good. That is a perfect way to end it. But I'm going to steal one of your questions that you ended it. I'm going to ask it back to you, because I don't know if anybody asked this to you. So I'm throwing it to you, man. Who do you want to meet?
Theodore Roosevelt.
Theodore Roosevelt? Why?
Yes.
I want to hear that.
He's just, I read, there's a really great biography about him. It's like, at the time, I was reading through it in college, and I thought it would never end because it was like 980 pages of really, really, really small text. But I mean, the guy's life is incredible. Like what he's had to battle as a kid, suffering severe asthma, always underweight. Which, you know, to get personal, I was always kind of a smaller kid growing up. I was never the fastest, never the strongest, and the Theodore Roosevelt story really resonated with me because he took what he had, and I mean he would be bedridden for weeks because his family would go away on these European trips, and he'd be bedridden for weeks because his asthma was so bad, and he just could barely breathe. And he took that and he basically said, okay, like I need to make myself, like I need to transform myself, and it's up to me. And he took accountability and he trained his ass off. He swam, he boxed, he did jujitsu, he, hiked, he hunted, he did all of these things because he understood the depths of how bad it could get. And he never wanted to go there again. So he said, I'm going to do everything I can to just not be that person, just to overcome it. And, so those stories are awesome. And then just seeing his dogged determination, at the bully pulpit and just making a scene in Congress and him, from living in New York and striking it through in politics to then making it to the presidency and just, all throughout having a real Renaissance mentality, loved nature, loved geopolitics, loved the strategy of war. And he just had all of these things going, in his brain. I think he wrote like one of the, one of the epics of, I want to say it was like the 7 Years War or some war. He like wrote a whole history about it when he was 22 or 21. And he's just an incredible human, and everybody has their faults, but, I mean, gosh, like just to have a dinner with him and just ask him about some of these stories is I like, you could do an entire podcast about Theodore Roosevelt, honestly.
All right, fine. I'll host it. Let's go. You could do a book review on there.
Yeah, that'd be amazing.
That'd be awesome. All right, Brandon, with that, where can my audience go and find more information about you, follow you on social, listen to the pod, give all the plugs?
Yeah. So the podcast is, just type in Value Hive Podcast and whatever podcast platform you listen to. Head on over to macro-ops.com if you want to learn about some of the research we do. We have, the free site where we post a bunch of ideas and research, and we also have a premium service called The Collective, where you get kind of our full portfolio, weekly trade updates, and a community of incredible traders and investors. That's unlike anything that I've seen on the internet. So there's that. And then on Twitter, again, you can follow me at MarketPlunger1, and please also follow me at Brandon_Beylo.
All right, dude. Well, thanks again. This is awesome. And I look forward to our next chat.
Yeah, man. Likewise.
All right. Take care. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.